Okay, good morning. We are now live, and what we are going to talk about is the different COVID-19 relief program. All right, I'm Christopher. I'm Christopher De La Cruz Coco, CEO and founder of WYCOTAX. I'm a tax professional, also an IRS certified acceptance agent, and 2018 SBA Minority Business of the Year. Now, this is our presentation. We call this Why Coffee Break. Our topic for today, this is a COVID-19 webinar, the Small Business Owner's Guide to the CARES Act. The programs and initiatives in the Coronavirus Aid, Relief, and Economic Security, also known as CARES Act, that was just passed by the Congress are intended to assist business owners with whatever needs they have right now. This Facebook Live webinar will cover, for today, employee retention credit versus COVID-19 paid leave versus payroll protection program. If you have a pending COVID-19 relief, we do offer 20% off on how to do a COVID-19 service packet from the IRS, relief program, SBA, even the state and county and city have their own programs for the relief. Just a disclaimer, this material has been prepared for informational purposes only, and it's not intended to provide and should not be relied on for tax, legal, or accounting advice. You just have to stay tuned for more Why Coffee Break, because just like you, your tax needs a break. We're going to cover the three following new relief that have been approved since March. They are the COVID-19 paid leave. This is the outline of the presentation. We also have the employee retention credit, payroll protection program. What does it mean? Who qualifies? When will it begin? How does it work? How to claim? Record keeping requirements, the frequently asked questions, and at the end of the presentation, we will go with some questions. All you have to do is type it on the Zoom chat box. So we posted the ID. For people of you that are not in Zoom, you can join us through our Facebook Live chat. Let's start with the COVID-19 paid leave. Okay, in summary, COVID-19 paid leave are for people that get sick because of the virus. Now, the employee retention credit are people that are still working, and the Paycheck Protection Program are for people or business owners who would like to short up a budget and would like to continue keeping their employees. Now, what is a COVID-19 paid leave? What does it mean? The Families First Coronavirus Response Act, or the FFCRA, signed by President Trump on March 18, 2020, provides small and mid-sized employers refundable tax credits that reimburse them dollar for dollar for the cost of providing paid sick and family leave wages to their employees for leave that are related to COVID-19. Let me just emphasize that this is a tax credit. Okay, what is a tax credit? A tax credit is an amount of money that taxpayers can subtract from taxes owed to the government. Unlike deductions and exemptions, this tax credit reduces the amount of taxable income, or what I'm saying is the tax credits reduce the actual amount of tax owed. At the end of the year, it reduces whatever tax liability you have. Either it's a payroll tax, either it's a self-employment tax. So that is what the tax credit is for. Now, who qualifies for the COVID-19 paid leave? The Family First Coronavirus Response Act gives businesses with fewer than 500 employees. Okay, if your company, you are hiring or you have less than 500 employees, then you are the ones qualified for the paid leave to apply the COVID-19 paid leave. And also the good news, you don't really have to have employees. You could be a self-employed individual and you can also qualify for this relief. Okay, now, Christopher, how am I going to qualify? There are two. Number one, if I have employee, let's say my receptionist, her name is Gloria, then she experienced one of the following situations that we're going to talk about. Number one, let's say my receptionist, Gloria, whether the federal or the state or even local quarantine or isolation ordered related to COVID-19, that she's subject to that, to the quarantine, number one. And then number two, she has been advised by a healthcare provider to self-quarantine due to concerns related to COVID-19. Or if Gloria, my receptionist, is experiencing symptoms of COVID-19 and seeking a medical diagnosis. If she's already having the symptoms, cough, fever, flu, all those flu-like symptoms, if she's already experiencing that, she can qualify that I have to give her that paid leave. And number four, it doesn't really need for her to get sick. Sometimes if the employee is caring for an individual who is subject to a federal, state, or local quarantine, my employee is already qualified to apply for the paid leave. Okay, if that's her kids, a brother, sister, any family member or individual living in the house. Number five, if the employee, my employee, let's say Gloria, is caring for the child of such employee, if the school or the daycare, the place of care of the child, has been closed, or the child care provider of such child is unavailable due to COVID-19 precautions, that can also qualify. And number six, the employee is experiencing any substantially similar condition specified by the U.S. Department of Health and Human Services. Any of these reasons will qualify for the employee or the business owner, him or herself, to apply for the paid leave. Now we will dissect when it will begin. It started on April 1 and it is available until December 31 this year. Now, how does it work? We're going back to the reason. If the reason of my employee, Gloria, let's say her reason is either 1, 2, or 3, she's subject to local quarantine or isolation. If she has been advised by the doctor to self-quarantine due to the concerns, or even she's experiencing the symptoms, this is what will be the compensation for her leave. That is what you call the paid sick leave. Okay? For reason 1 to 3, if she's an employee, the maximum amount set by the IRS is $511 per day. That is the maximum amount that she can use. How many maximum days? She would be able to use it for 80 hours, or that is equivalent to 10 days. Is the employee will be paid up to the maximum 511 for the next 10 days. So now, this is the maximum, but what if it's the actual? What is going to be the basis? The basis of the compensation will be the hourly rate. For example, my receptionist, Gloria, I'm paying her $10 per hour. So now it's 100% of the rate. So $10 per hour times 80 hours, she has to receive on her paycheck an $800. That will be her compensation. Okay? Now, going back, how about if it's a business owner? For example, like the business owner of a restaurant, let's say Carlito, he runs a restaurant, he's by himself, he doesn't have employee, he wants to cut the cost. And then suddenly, he experienced one of the symptoms. The way the IRS works, or it's gonna be computed, will be based on what you call the ADSEI. That is the average daily self-employment income. Why? Because as a business owner, you don't pay really yourself. You don't pay yourself a salary. If you're a sole proprietor, sometimes you do owner's withdrawal. You just withdraw money. So there is no specific or set amount. So the IRS will just going to base it on last year's gross income. For example, the 2019 gross income is $150,000. That's not the computation yet of the ADSEI. They have, let's say, the business expenses for all the things that he spent on running the restaurant is $50,000. We have to subtract $150,000 subtract the 50,000, then the net income would be $100,000. That is the net income for 2019. And the way we compute, we have to divide it on 260 days. Why? Because it's not 365, because it's only 5 days times 52 weeks, Monday to Friday. That will come out to 260 days, 100,000 divided by 260 days. Then the average daily self-employment income would be $385 per day. The maximum, let's say, is what? For 10 days, he will get 3,840, the business owner himself. If you're going to look on this computation, the IRS says whichever is lower. So since 385 per day for business owner is lower than 511, he would be able to get $385 for the maximum total of sick leave of 3,840 for the next 10 days. Moving on. I know this is too much. There are so many computations, but like what I've said, we provide one-on-one consultation if there are specific questions that you have to ask us. We are here to help. Now, if, for example, you're done with the paid leave, if the reason doesn't fall on 1, 2, 3, and it falls on 4, 5, 6, if the reason of the employee or the business owners are the following, for example, I'm not sick, but as a business owner, but at the same time, I have to take care of my sick mother, or I have to take care of my kid, my brother, my sister. That is reason number 4. Now, if the daycare or the school is closed and I have to provide, I have to take care and watch out for my kids, I would also qualify for this. And number 6, if I have experiencing other substantially similar condition, if I'm not sick and somebody else is sick, this is the leave that I can use. For the employee, let's say Gloria has to take care of her mom or anybody living there, my receptionist, she will be qualified to the maximum amount of $200 per day. Okay? $200 per day for the next 10 days, that is equivalent to 80 hours. The computation is only 2/3, okay? For example, Gloria's rate is $10 per hour. She will not be able to receive the $10 amount per hour, but it's only 2/3 of that, which is equivalent to $6.67 per hour for the next 80 hours. So for her leave, if she's not the one that is sick, and it falls on reason 4, 5, 6, for the next 10 days, her total paycheck would be $534. Okay? For 80 hours. Now, for the business owner, it also falls on the same thing. Remember, the average daily self-employment income, what we talked about a while ago, is $385. Since he's not the one that is sick, he has to take care of his spouse or kids, then only 67% of 385 will be given to him. What is the 67% of 385? It is $257. But remember, here is the catch. Because the maximum allowed allowance or paycheck per day is $200, then we have the limit is only $200, then the business owner will only be receiving $200 and not the $257. Because according to this law, whichever is the lesser amount will be the one that will be given to the applicant, either to the business owner that is applying for the credit. Okay? Now, there is another provision which falls on number 5. If the employee is caring for the child of such employee, if the school or place of care of the child has been closed or the child care provider of such child is unavailable for more than 10 days. Let's say she already maximized and used up that leave. Now, there is a new one. We call it the Expanded Family Medical and Leave Act that will give the employee, like the mother, a $200 per day to the maximum of 10 weeks, or that would be 50 days. Okay, so it also falls the same. It's only going to be 2/3 of the per hourly rate, whichever is lesser. To the maximum amount of how much? $10,000 is the maximum amount that the mother can get or the father can get in able to take care of the kids if the school is still closed or the place of care of child has been closed up to the next 10 weeks. That is the Expanded Family Medical Leave Act. The business owner falls on the same. It's only 67% of the average daily self-employment income. But like what I've said, whichever is lesser, that is going to be $200 per day, not the 257. Now, how would you claim it? If it's my employee, let's say my receptionist Gloria, all I have to do is I have to file, because quarterly we are filing the 941. The 941, this is the employer's quarterly federal tax return. All I have to do is to put there how much leave and how much money we paid her in able to offset the 941 payroll tax and the total amount of paid leave that have been provided to them. But now, the IRS is giving, let's say, Christopher, if I don't have money right now to pay that leave, all they have to do, the employer has to fill out the 7200 form, advance payment of employer credits due to COVID-19, and the IRS expects to begin the processing this request this April of this year. For the business owner, what's going to happen, this is going to be a tax credit for your 1040 tax return for year 2020, okay? Since you're not paying yourself, you're not on the payroll, then the alternative with that is your 1040 tax return for year 2020. Now, what are the record-keeping requirements? An eligible employer should keep all the records of employment taxes for at least 4 years after the date the tax becomes due or is paid, whichever comes later. This should be available for IRS to review. Since we are a payroll bookkeeping company and tax company, we were able to process, we are processing some of our clients already with this benefit, because we have all their 941s, and on top of that, we have the record of their income, expenses, their Medicare and Social Security contribution. So we make it easier for them to apply. Okay, we're gonna go to the next one. We have the employee retention credit. What does it mean? The employee retention credit is a fully refundable tax credit for employers equal to 50% of qualified wages that eligible employers pay their employees. This employee retention credit applies to qualified wages paid after March 12, 2020 and before January 1, 2021. The maximum amount of qualified wages taken into account with respect to each employee for all calendar quarters is $10,000. It means to say that it's only $10,000 per employee throughout the whole year. So that's the maximum credit for an eligible employer. What is the 50% of 10,000 is only 5,000 per employee. Employee retention credit, who qualifies? If you fall in on this following category, you may qualify. It says here, those that carry on a trade or business during calendar year 2020, including nonprofit or tax-exempt organization that either fully or partially suspends the operation during any calendar quarter in 2020 or experiences a significant decline in gross receipts during the calendar quarter. You don't have to meet both. It's only one or the other. For example, let's say here in Texas, the governor issues an executive order closing all restaurants, bars, and similar establishments in the state in order to reduce the spread of COVID-19. However, the executive order allows those establishments to continue food or beverage sales to the public on a carry-out, drive-through, or delivery basis. This results in partial suspension. even if they are not doing dine-in and they still do carry out and drive-through or delivery basis, they are under partial suspension. They are still qualified because it says here they are partially suspended. Now, due to an order of appropriate governmental authority with respect to any restaurants, bars, and similar establishments in the state that provided full sit-down service, a dining room, or other on-site eating facilities for customers prior to the executive order. When did it begin? It started March 12 up to January 1, 2021. If you remember, the paid leave credit, it starts on April, but this one started March 12. How does it work? The credit equals 50% of the qualified wages that an eligible employer pays in the calendar quarter. The maximum amount of qualified wages taken into account with respect to each employee for all calendar quarters is $10,000. Wait, I have to charge. $10,000, so that the maximum credit for qualified wages paid to any employees is $5,000. For example, the eligible employer pays, let's say, pays $10,000 for the second quarter for one of her employees. The total amount that she or he paid is $10,000 for quarter 2 of 2020. The employee retention credit available to the eligible employer for that wages, qualified wages paid to employee A, is $5,000. So that $5,000 is the one that will be given back as a refundable credit to the employer. Then how to claim? It also follows the same. If you, on all your federal employment tax return, we call it the Form 941, the employer's quarterly federal tax return, but they can benefit more quickly from the credits by reducing their federal employment tax deposits. Now, if there are insufficient federal employment taxes to cover the amount of the credits, an eligible employer, we can request an advance payment of the credits from the IRS by submitting again the Form 7200, Advance Payment of Employer Credits, and the IRS expects to begin processing this request this month already. What are the record-keeping requirements? Now, please make sure when you are claiming this credits that you have to keep it for at least 4 years, the Form 941. Any information that you have to retain the records and documentation of the employees, and the 720 if you use this form for the next 4 years, that the time that you requested the credit. That's why if you find this form complicated, we are here to help. We have been doing this and compiling all of our records from tax payroll bookkeeping together. Therefore, it is much easier, especially when you are working with the IRS or even with the SBA provider or agent. Now, the last one will be the Paycheck Protection Program. What does it mean? The program would provide this cash flow assistance through 100% federally guaranteed loans to employers who maintain their payroll during this emergency. If employers maintain their payroll, to the loans would be forgiven, which would help workers to remain employed. Okay, for the first time, let's say they got sick and they got back, so they qualified for the COVID-19 paid leave, then but you want to keep all your employees. The problem with this one is you can only use the Paycheck Protection Program. There is no double dipping or the employer's employees tax credit. You can only use one or the other. Okay. The thing with the Paycheck Protection Program, this has if you only have 500 employees and less. Okay, that is the main difference. The employee tax credit, if you have, it has no limitation to the employees. You can have as more than 500 employees as you want to claim this, the employee tax credit. So this is the attractive features is forgiveness up to 8 weeks of payroll based on an employee retention and salary levels. There are no SBA fees and at least 6 months of deferral with maximum up to a year. small business and other eligible entities will be able to apply between February 15 up to June 30. Okay? The loans are available through June 30. When we say at least 6 months of deferral with maximum deferrals up to a year, for example, you got approved on, let's say, May, okay? You're not going to start paying on May. They will give you 6 months deferral, so April, May. So from May, June, July, August, September, October, November, you will start paying that loan on November, but you can request an extension after 1 year. So another 6 months from November, December, January, February, March, April, May. So you will start to pay by next year for the loan that you applied. But there is a good news about this the Paycheck Protection Program. Now, who qualifies? Small business concerns as well as any business concern, even nonprofit, even the veterans organization are qualified to apply. That has, just take note, it has to has fewer than 500 employees. Not only people or business owners that have employees, individuals who also operate as sole proprietorship or as an independent contractor and eligible self-employed individuals. If you are receiving 1099, you might be qualified. You are working as a DBA, all of this, you are still qualified even you don't have employees. When will it begin? Business and entities must have been in operation, okay, since February 15, 2020. And the loans are available through June 30, 2020. How does it work? Depending on the size, on your business situation, the loan size will be calculated in different ways, and the maximum loan size is always $10 million. If you were in business on February 15 up to June 30, 2019, February 15, 2019 to June 30, 2019, your maximum loan is equal to 250% of your average monthly payroll cost. For example, I'm paying my employee $2,000 per month. So what is 250% of that? The 250% of that would be 5,000. Okay? So that is the average monthly payroll cost. And if my business is seasonal, the maximum loan is equal to 250% of the average monthly payroll cost between February 15 to June 30, 2019. You can also opt to choose March rather than February 15 as your time period start date. But if you were not in business between February 15, 2019 to June 30, 2019, your maximum loan is equal to 250% of your average monthly payroll cost between January 1, 2020 and February 29, 2020. So it's like whatever 10,000, 10,000 divided by 2. January, February, if your payroll is 10,000 monthly, January and February, then divided to 2. If you took out an economic injury disaster loan, the EIDL, between February 15, 2020 and June 30, 2020, and you want to refinance that loan into a PPP loan, you would add the outstanding loan amount to the payroll sum. Okay? Now, how does it work? The forgiveness amount is calculated. You can ask for the forgiveness on a covered loan if it's equal to the sum of the following payroll costs incurred during the covered 8-week period compared to the previous year on time period, proportionate to maintaining employees and wages. But it has a limit. It excludes compensation that is over $100,000. Payroll costs plus any payment of interest on any covered mortgage obligation, not including any prepayment or payment of principal on a covered mortgage obligation, plus any payment on any covered rent obligation, plus any covered utility payment. What I understand with this one, it does not only apply for the payroll, they can forgive you based on a 75-25 rule, that the total amount of the payroll of the loan should, 75% of that and more should go with your payroll, whereas 25% go to your other expenses like rent and utilities. That is one of the qualifications for you to be forgiven for this, the Paycheck Protection Program. Now, how to claim? Here in the lower Rio Grande Valley, in RGV, these are the express lenders. American Bank, Bank of America, here are the listings. Where did they find this? You just have to go to the SBA.gov website, and these are all the banks that are offering the Paycheck Protection Program. Okay? This will be managed by a SBA authorized express lenders. The best way is whoever you're using right now, whoever the bank that you're using right now is the one that you have, it's a go-to person that you have to contact them right now. Now, what is the record-keeping requirements? What are allowable uses of loan proceeds? Like what I've said, this is for the payroll cost, employee salaries, commission, similar compensations, and not only that, but even the rent, including rent under lease agreement, the utilities, interest on any other debt obligations that were incurred before the covered period. Then what costs are eligible for payroll compensation? It could be a form of salary, it could be a form of wage, commission, or similar compensation. Payment of cash, tip, or equivalent. It could be payment for vacation, allowance for dismissal, payment required for the provisions of group healthcare benefits, including insurance premiums, and payment of any retirement benefit. All of this will be required by the banker or wherever, whichever bank you will use. So make sure that you have all these records or your books is really organized and clean to make sure it will be processed right there and then to avoid delays. Now, we will go with our frequently asked questions. Number one, this is what is the relationship of all of this credits and relief? Number one, can I apply for both employee retention credit and Paycheck Protection Program? The answer is no. There is no double dipping. You can only use one or the other. Remember, the Paycheck Protection Program are only for businesses that have less than 500 employees. How about the employee retention credit? You can have as much employees as you have to get this credit. How would you know that? It all based down on the numbers. Our company, WYCOTAX, as a tax payroll bookkeeping company, we are started to give a comparison of the numbers of the amount of credits they will get to our clients. So we would be able to identify which one will give them the maximum benefit in terms of savings and in terms of the credits. Okay, you have to be very careful with this. You need to go to your books, check your whatever files you have and how many employees, go back to your payroll records and make sure that you are putting the numbers right. Because the number of denials at this point is because either the applicant is putting the incorrect number or the incorrect form that they are using. Number two, can I claim both COVID-19 paid leave and employee retention credits? The answer is yes. Remember that the COVID-19 paid leave are for employees that are sick, okay? Now, when they go back to work, you can use the employee retention credits. However, please be reminded, you can only use one per quarter. You cannot use them all at the same quarter. Let's say April, May, June. If you're going to use the paid leave, then from July, August, September, you can use the employee retention credits, vice versa. Number three, how to apply for forgiveness on my PPP loan. Like what I have said, you need to have an organized books, you have to have an organized payroll, and you need to have the copy of the 941, your profit and loss, balance sheet. All of those matters enable for you to be forgiven for the PPP loan. Now, our outline for today, we covered the following: the COVID-19 paid leave, employee retention credit, payroll protection program. Like we talked about what does it mean, who qualifies, when will it begin, how does it work, how to claim record keeping requirements. Frequently asked questions, we go over with that. And now, this is the employer takeaway. The legislation is complex and was put together quickly. No one can be an expert on this new law and its intricate provision, according to Jason Brisman, the attorney in Philadelphia. So you have to communicate early and often to your tax advisor, to your payroll, whoever doing that, to your bookkeeper, accountant, that is more knowledgeable, because what I'm telling, we are all on the same level playing field. If we find it complex on our end, this is our language already. If you think it's going to be much more complicated on your end, it doesn't hurt to ask someone, okay? It doesn't hurt to get a consultant to know and to navigate with the different credits, okay? It's not a trial. This is not a trial and error. This should be accurate, and you should have someone that is well experienced on handling the tax credits and together with the forgivable loans. So that is why, if you're having a hard time on top of our service that we're doing, the payroll, books, and tax and LLC filing, we are doing, and in lieu with the situation, we're giving 20% off. We will file your taxes and clean your books today. And together with the COVID-19 relief application, remember, it's a first come, first serve basis. You don't want to be left behind. You have to act now. Once you do get us our service, we also do the COVID-19 service packet. What we do is we navigate from the different programs, from the different benefits that the IRS is providing through the SBA, even the state, county, and city relief. We will be the one processing and submitting all the requirements. If you will get our service before April 30, we are giving 20% off for our services. All right, thank you. And then next week, we're going to go over with the Economic Injury Grant and the Small Business Relief Program. These are for people that have existing balance, have an ongoing payment to their banks that is SBA guaranteed. We will go over on how to do the Small Business Relief Program. And then on April 23, stimulus check payments. And on the last week of April, April 30, the guidance on deferring tax payments due. 10 to 11 a.m. still every Thursday. And as a matter of fact, if you will share our event, we are going to cover as our contribution to the community. We file a free tax extension filing as long as you share our event. This is our contribution to our community in able to help. And at the same time, if you have more questions, there are free 30-minute consultation. Feel free to text us, please. We tried to respond to the call, but we got so many calls every day. We are requesting if you can text, because we can respond to you promptly by texting our number 956-425-WYCO, or that's 956-425-9926. Then just a short background of the company. We established our company 2015. We are an all-year-round, all-in-one tax payroll bookkeeping service solution with a combined 20 years of experience. And that's the reason we stand by its name. We work with our clients and with our partners to be worry-free, to be year-round, competitive, on-time tax payroll bookkeeping service solution. I'm an IRS certified acceptance agent. We have QuickBooks certification. And we handle and resolve more than $321,000 way back 2018, both for payroll tax audit and for the self-employment tax audit. And don't take my word for it. Feel free to check us online, all our credentials and reviews. As a matter of fact, we have 707 reviews and recommendations, the highest review and recommendations online here in South Texas for financial industry. Okay, I'm gonna unmute everybody for questions. Let me read the questions. Okay, I hope you guys are enjoying the adjustment right now using this webinar. Now you guys are feel free to ask questions.
Okay,
you are all unmuted.
Un seminario.
No, pues tranquila, ya era para eso.
Okay.
Ahí enseñamos cualquier cosa.
Está bien, corazón.
Let's see Facebook. Okay. I have a question from Matthew. Proof to qualify. Okay, hold on. Let me go back. We have Facebook questions. What proof do you need to qualify? Mr. Ligera, the proof to qualify, of course, you need to have what? The 9, it depends. Which one are you applying? Okay, for the employee tax credit, it would be the 941 if you have an employee. Those 941, that is the quarterly filing of your payroll tax to the IRS. Any payment that you have contributed, those are the reports. Now for the what's the other one? Employee tax credit. It's also the 941. Then for the PPP, what I've seen, I haven't really go through the website to the bank. You have to go to the bank, and I know they have an application form, and they will go from there because they will ask you what the previous records of your payroll has. Do you have the paycheck? Do you have the pay stub of your employees? And also, if you would like to extend it to your mortgage, utilities, they will need receipts and your clean and organized books for 2020. Okay, next we have Matthew Clinton. If an employee was let go in mid-March, can I rehire them? And are they covered in the Paycheck Protection Program? Okay, let's go back with the PPP program. It covers when you rehire them, and the Paycheck Protection Program, it says here if you were in business in February 15 to June 30, it is based on the average monthly payroll cost. So for example, you've been paying regardless of how many employee you have, the basis would be how much is your payroll cost, okay? So if you're paying 10,000 from February 15, from February 1, let's say February 1, then today is March, and then January, February, or February, March, April. So those are, let's say, 3 months, and you're paying 10,000, 10,000, 10,000. Then you have to divide it to 3. That is the average monthly payroll cost. So it has nothing to do whether you rehire the employee or not. It is all based to the total payroll cost you are spending in a monthly basis, the average. Thank you, Matthew. So any more questions? Okay, we have a chat. What I need for business owner? All right. My question, Adriana, is what are you trying to apply for? If you're applying for the business owner, let's say employee tax credit, like what I've said is the employees record, their 941, their paycheck. If you are applying for the ETC, employee tax credit, for the payroll protection program, paycheck protection program is the same. Those are the basic. But if you want to expand, let's say more than the payroll, but you want the mortgage to be covered and utilities, they would be needing your monthly bookkeeping, the profit and loss. For the paid leave, COVID-19 paid leave, they just need the 941. We have to submit the 941. So today is April, May, June. The deadline would be July. Thank you. Yes. Yes, it's a lot of details. Thank you. It is too much to handle. I'm telling you, like every day, we are all on the same playing field because there are minor tweaks, minor changes every now and then that we have to catch up. Yes, we can give you the copy of the presentation for, yeah, we will have to email it. Just give us your email, or I think we have your email, okay? For those who would like to have a copy. More questions, Matthew? Okay, we answered that. Now, by the way, guys, that would be all for today. And I know this is, complexity is the enemy of execution. You just have to know the basic and let us handle the rest. At least you know what questions to ask whenever you talk to your advisor, whenever you talk to your tax preparer, bookkeeper, accountant. Just having this insight, but at the end, it's our responsibility to give you an up-to-date information as our contribution. And like what I've said, this is my pro bono to the community. And I hope if you feel like somebody can benefit with this presentation, feel free to share us and to like us, okay? Because the more we share, sharing is caring, okay? So there are no more, for those people, to Mr. Eddie, if you need assistance, okay, yes, we can help that. Feel free to message us on our Facebook page. My staff will set an appointment, Mr. Eddie. Yes, last week's presentation, we have, by the way, we have this on our Facebook page and on our YouTube page. You just subscribe and follow us and you can watch the replay because it's still uploaded, okay? So once again, if there are no more questions, guys, Thank you. Thank you for watching our Why Coffee Break, because just like you, your tax needs a break. Thank you.